What's going on, everybody? Happy New Year. Here we are kicking it off 2024, starting us off here with a new video. I took some time away from production, a little unwind during December, but now we are back in full swing, and I'm really looking forward to making these videos and hopefully helping everybody and sharing some of my insights into the market this year, and looking forward to having a profitable year together. So with that being said, of course, this video is for educational and entertainment purposes only, and in no way should be viewed as financial advice. So with that out of the way, let's kick off the video and start to look at a few charts here and see what we can take away. We'll look at some internal data as well, and see what we could potentially see here into the rest of the week. Now, still can potentially be a bit lower volume this week in the market. People still kind of just getting back from vacations and things like that. So still want to have some tempered expectations this week, and just still be a little bit more cautious overall when coming to the market. But next week, it won't be a short week, full trading week, and everybody should be back in the office, and then we could potentially see a bit more volume start to come back in overall. So let's take a look here. We're going to start off with the monthly chart and do some bigger picture recap of what we saw into the end of the year. But before we do that, let's go over the economic calendar for this week. We've got a couple of things that wanted to point out that we should keep an eye on, and after that we will dig into some charts. So without any further ado, let's get into the economic calendar here from Market Watch. All right, so Monday obviously was New Year's Day. We did not have anything for that. Today we had U.S. manufacturing PMI was really a nothing burger. But tomorrow we do have Barkin from the Fed speaking 8:30. Markets will be closed as pre-market, but U.S. job openings at 10 o'clock. And then we do have FOMC Fed minutes from the December meeting coming in at 2 o'clock. Recently, those have been pretty much nothing burger. So, but either way, we still want to be cognizant of that release. So we will keep an eye on that for sure. Then Thursday we do have initial jobless claims at 8:30 and U.S. services PMI 9:45. But the one probably I think that's worth paying attention to the most here, we've got non-farm payroll coming out on January 5th at 8:30, so that will be something I definitely will be watching. And then we do have a Fed Barkin speaking again at 1:30 on Friday, and that will close out our week. So definitely FOMC minutes and non-farm payroll I think are going to be the big things that I will be watching. Maybe a little bit on that initial jobless claims on a Thursday at 8:30 I will pay attention to as well. Probably won't trade anything around that, but I still will pay attention to see how the market reacts. All right, so with that being said, let's get into some charts here and taking a look at the monthly chart here, and let's kind of go back over, you know, what we saw into the end of the year and kind of what we were looking at from this picture perspective, right? So let's do a little recap. All right, so we had obviously this big sell-off right here. We were watching, you know, we were talking about that potential cup and handle type of pattern, you know, setting up. Went a little bit deep for me for the cup and handle, kind of invalidated that setup. But what did we talk about, right? We talked about the retest of this prior structure, and we were always saying, you know, we had a bearish bias on the daily, on the weekly, but what were we watching from the monthly? Really, we said on the monthly we still had a bullish outlook, right? Because what did we have here, right? We had our swing low, right? And then we had right here was the retest area of that prior breakout, right? So if we put this right over here, and if we made like a little, whoops, wrong tool there, but we'll do it like this. If we did this, oh shoot, sorry. I used the wrong tool, so I had to draw it like that, right? This was that kind of inverted head and shoulders, right? And then we came back, retested. We were always talking about that this low being produced could be what from here, we had our swing low, a higher low from that monthly time frame perspective, right? That's all that was going on, and that's pretty much what we got here. And the monthly chart remained bullish, obviously, with this push nearly up to new all-time highs. I know QQQ did it, but we have not seen it on the spider, the S&P, just yet, and I'm not sure if we will. Maybe we will, maybe we won't. But either way, the bullish monthly viewpoint really kept things in perspective for us about really what was going on in the market, right? And we were talking, right? We talked forever about that 410, right? Forever we were saying 410, 410, 410. Where we were looking for that, and what were we looking at, right? This was here, volume point of control into this area, and we were looking for price to come back. And what did we talk about? That prior consolidation from springtime, right? All this volume in here, and that's where price, and we've talked about this before in many videos, right? Market only really has one job, and that is to seek liquidity, and all this volume, all this liquidity in this area was just waiting for us to get into that. We came right into that area, boom, and then that's where we saw our bottom, right? And that's pretty much how that played out. So congratulations if you were watching the videos. We hit our downside target, and we were cautioning here, be careful, don't short this hold. This was it, and this was that time to go long. And what kind of a move did you get from there? Nearly a 77-point rally from our downside target. Boom. I mean, you really could not get a sweeter move right there. Tons of money to be made on this rally. I mean, just incredible move, and really just really great to watch overall, right? And so let's also kind of go back a little bit on the weekly now, and we're just doing this quick recap, but let's go back on the weekly, right? And so what do we say on the weekly? Right after we broke out of that, we were still a little skeptical, right? We needed to break over this area here, right? In the 436 area, 437, we had to break over this area for that new weekly trend to take place, right? And then, or excuse me, I think that was the daily, excuse me. And what was going on there, right? It was a back test, and you guys can all go back and look at the videos. We went over all of this in real time with our videos, and it's all documented. So what were we looking for the daily to start to improve, right? It was this head and shoulders, right? Oh, I pressed the wrong button again, but it's okay. It was this head and shoulders, right? Or double top, whatever you want to call it. But we had our swing high here, right? And we had our lower high here. And then we had another lower high here. Okay, so, but this was that structure breakdown, right? Doom, breakdown, came back, retested the structure, couldn't get back over, and that gave us our final leg down, right? So what else were we talking about now from the weekly perspective, right? This is where we said, okay, here we've got a new daily uptrend, great, right? But I still wanted to see that daily, that weekly chart show me a new uptrend, right? And when did that happen? That happened when we took out right here, right? This was the first breakdown. This double inside bar here, we were watching, right? And that's what needed to be recaptured for the weekly uptrend to really then be confirmed. And after that, it was off to the races. Certainly when we broke over the summer highs, that gave us, you can see really the reaction here when we broke over the, what is this, July 24th highs. Broke over that. You see the short squeeze over that move here. Look at this candle. Boom, right? And now we pushed up, right? And now here we are. Coming into the new year, kind of slowing down a little bit, right? You can notice the candles here, the momentum. You look at the size of the candles. Big, strong candles here. Here now they're starting to get a bit slower, right? And so we're watching to see what's going on or what could potentially be going on here. Will buyers get exhausted? Is this our swing high? And then here, what is it now? Are we putting in a potential lower high from here? Well, again, I'm not talking in any sense of we're going to crash or anything like that. No, but could we use a pullback? Is this space between the 20, our homeostasis moving average, is this extended from our moving averages? Yes, certainly, right? So can we afford a pullback? Without a doubt, right? And I really like what's going on here on the weekly. If we're just going to look at it from this perspective, look at the confluence pretty much here with the weekly 9 and pretty much those swing highs from summer, right? So I could see us potentially coming back into this area here. Nice little pullback, a little short-term, seller, a little short-term pain for the bulls, and then we come back into here, and then we make our move up higher, right? So we will watch this scenario. I think that this could be something that we want to pay attention to, and that weekly 9 is sitting right at 462. We'll call it 25, sitting at 27, but we can call it 25. That's fine. It's possible we even see a deeper pullback than that, which would be no problem. We can afford that without a doubt. Showing nice confluence here. Now, it's interesting. We see the confluence here on the weekly at the summer swing high, but now we're seeing also confluence with the weekly 20 at the top of our double inside bar, right? This is what really gave us that weekly uptrend confirmation. So I could also see us pulling back into this area, totally fine. Retest the weekly 20, and then we make our move up higher once again, right? And I'm sure once we pull back into this area, you're going to see the bears start screaming about, now we're finally coming down, and now finally it's happening. Not so fast, right? We'll have to see, and we take it day by day, week by week, candle by candle. But either way, until that breaks down, or really we start to lose that, then we could start talking about some potential, more meaningful reversal, but as it stands, either way, nice confluence as well, besides this double inside bar on the weekly here. 441, we'll call it 442, 441.95 right there, weekly volume point of control. Wouldn't surprise me maybe even to come in there, pretty much in that zone that we were looking at here 2 seconds ago. But let's go back here into the monthly chart really quick and just kind of point out a couple of things that are a little interesting to me, as far as that could be saying, all right, maybe we will get a little bit more of that pullback here. First thing is monthly value area highs, right? Now we're talking about these really big, areas of volume here. Obviously because we're dealing on a monthly time frame. So these are pretty, I put a lot more weight into something that I see on a monthly or a weekly chart versus, daily or an hourly, obviously. So monthly value area high sitting up here, 478, what is this, 26, we could call it 30, 25, anywhere in that area, sure. And that is still not as high as our all-time highs here. The other thing that I am watching here on our overbought, oversold, our Momo, starting to get a little bit spicy up in here. Now you can see obviously in July, look at this, April, what is this, March, April, May, we stayed up in the 13 readings on the monthly for about 2-3 months. Even back to February, 4 months, almost 6 months we stayed overbought before we finally started seeing this pull down, right? So I don't think that necessarily we have to, it's something to be, totally worried about yet, but I am noticing it. What is our current reading is probably, where are we at here? Gonna be 11.5. I'm just gonna be cognizant of this, right? And we are starting to see that as well on multiple time frames. Weekly is certainly in that same type of situation, a little bit higher. Well, it's about the same reading, more or less, about that 12.5 overbought. and the daily as well. Daily has been overbought, and it's starting to calm down just a little bit. Interestingly enough, daily, it's not a convincing close really. Well, daily 9 sitting at 473.30 here, and we did close underneath it. Green candle, so we did get a little bit of a rally at the end of the day. Into the close, probably more so short covering, but we did have a ridiculous MOC, market on close order. I think it was 7.7 billion or 7.4 billion to the buy side on the MOC order today, which was, I think, one of the biggest ones I've ever seen. I saw multiple people posting about it on Twitter. So that was really interesting, and we had a real nice rally in the tech sector into the close, which I was able to participate in, thankfully and gratefully. But we'll see. Tomorrow, we could easily just pop back over the daily 9 here. That wouldn't be a problem. Daily 20 sitting right at 480, what is this, 468.25 more or less. So we could even see a little bit more downside here. I did put in the weekly range here. This is based on the options contracts. So far as for what we're seeing, the weekly implied range overall is at 469.95. Upper bounds is 480.65. So that's the expected move. Whether we tap the either of these or break them, I am not sure. It is unlikely, but it is possible that we do break out of those ranges. But usually price stays contained within these weekly ranges based on the options pricing and positioning. So with that being said, we did have a decent move to the downside today, and pretty much, was it actually a gap down? It seems to, I think it was. I know that NQ was down about 350 points at a couple of points during the day today. But, I think that these lows pretty much, and let me see actually here, the low on the 29th was 373.30, where the high today, did we come back? 373.67. So we actually did come back and retested yesterday's low. I think that's pretty normal price action, but I'm going to really need to see some daily closes over that to start to feel a little bit better about resuming this uptrend overall in the market. So we want to keep an eye on that 473.70 area. Price is going to need to recapture that, and if you are bullish, you would want to start to see something like this come in. I'll try to do my best at drawing some candles here, and then we can go ahead and resume like so. Right? Yeah, that's not that bad, right? That's what you would want to see if you're bullish. However, if we do stay below this area and consolidate, right? We stay below here and consolidate like so. Oops. And are unable to recapture, consider that potentially a little bit of a bearish consolidation. And if we do start to really break and accept under that 470, 469.95, if you want to call it that, we'll be looking at that daily 20 retest, and that's at 468.25 area. So that's what I will be paying attention to there. So we have those kind of two scenarios. We also, of course, could just chop right in between this 473.70 and 469.95. We didn't even hit that. We'll also look at the lows from today. It's 470.50 basically. So I think under today's lows, and certainly we would want to see. I don't know how keen I would be on shorten all the way down here. I would probably really would want to see a move under that 469.95. It could be unlikely considering the that is the expected range, but like I said, it could potentially break out of it. It's just a little bit more unlikely overall. But if we start to see some candles like this, maybe we set up on some type of a bear flags type of situation, and then we get something like that, right? So I'll be watching, but for me, I'll watch yesterday's, well, I guess I should say Tuesday's low. It is a short week. I think the more likely thing, especially considering the move that we saw, the volatility, especially in like NQ, it might be a more likely thing that we just see that sideways action here. So just be ready for that, and be able to be nimble. Tomorrow might be a little bit more of a scalp day, and a little tougher to actually hold on to a trend overall. But either way, I'll be a little bit more bullish or comfortable with that bullish thesis once we recapture that 473.70. Then we can look at this type of potential scenario. Maybe we will probably come up into the equal highs. I don't know if we'll break over, but if we do, then we can start talking about 480. Right, so let's see what happens from that perspective. Did also want to point out or pull up this kind of this charging. I did want to pull up. There we go. This chart as well. We've been watching some of this supply and demand areas here. You can see we kind of got stuff priced here on the daily chart, kind of making this really small candle here. Red barely could make it up. We had our red day, and then we had another gap down. So what I'll also kind of be watching is this kind of potential rounded top like that, right? And until again we get back over that 473, even on this from this viewpoint, it's going over the high from the from December 14th. So that's that's the 473. Actually, it needs to be a little higher. So pretty much the level I was talking about earlier, that 473.70, need to get over that, and then we can kind of take away from this viewpoint, right? But I really would not be surprised to potentially see this move down into the daily 20, and again that's sitting for 68.25, right? And that's pretty much, you can see where we stopped more or less today. What was the low again? Oh yeah, that 470.50 was close, 470.60, but pretty much it was the high of the candle from the 13th, right? That's where we get that area, okay? And also the high from the 15th. All right, so let's see. Bulls have been incredibly strong though, so it's it's anybody's guess of what they're going to potentially do. Seasonality wise, January can be a bit of a weaker month, so we also want to keep that in mind. If we have a green day tomorrow and we stay below that that bullish level I was just talking about, the 473.70, I might consider swinging maybe some monthly puts for next month, really with nothing too crazy in mind, but maybe just down to again the 20, and then take most of that position off, and then just see with one or two contracts, something small. Let's see if we can get down maybe to the lows from the 15th, maybe this 67.50 area maybe would be a nice little target for some downside, and that's still decent. That's about $4 or so, or whatever that is, so that's not bad, but we shall see. All right, let's go into some other charts here, and let's take a look at what we've got from those viewpoints. All right, let's go into our daily fibs and see what we are liking from here. Take off that little illustration. All right, okay, so all right, so I put this at the swing high. This is our swing high here. Yeah, really, actually, not too much to take away from this. We could pull all the way back. Again, as long as we're really holding, first step, is those prior summer highs, right? And that's pretty much sitting right at the 23.6 here. You can give it a little bit of a kind of a demand zone, right? So 461.50 to 459, more or less. A little bit of a demand zone there. We'll call it that, right? We could pull all the way back into there, and honestly, if we came back into the area, I would like a long there, right? We come back, retest the those prior swing highs, boom, boom, and then we go back up to 480, right? That seems like it could be another scenario that possibly could unfold. What's also kind of interesting about that, and we don't totally have the confluence, and I'm not going to just move this trend line obviously to make the confluence, but even if we sneak just behind it, we still have this from the megaphone breakout, right? I don't know, just remember when we were watching this broadening wedge form, right? And this was our consolidation from that last spring, right, where our target was for the short side. This trend line extending from the top. Okay, so even if we came down and actually broke into that, we could see something where we do a fake break below, but then come into this trend line that probably, I don't know how many people are still watching it, but we might do a fake break, come into this trend line, and then we move up from there. It's a little bit more risky, obviously, just buying the drop, but if you saw a wick and then a recapture of the this prior swing high from summer, that is the safer way to take that trade versus the knife catch. But I know those knife catches sometimes like that are they give at least a little bit even more favorable risk to reward, but they are more risky. It's always a give and take, right? But you can see here, and this obviously we spent plenty of time before above the value area highs on the daily, but we are above them again here on the daily, so I do want to pay attention to that. Above them on the weekly as well. Market can stay up there above it, but usually doesn't like it too much. But as we went over on the monthly before, we are still contained within those bounds on the monthly volume profile. So that is okay from that viewpoint. All right, so let's continue along here, and let's take a look at our bigger picture, our weekly trends. And let's take a look here. We did not quite get to this next high, almost very, very close. This is where we kind of started to see the sell down or the slowdown in the market, but we really didn't get there. If we had come back up, if we had completely touched this, I probably would have tried a short. I don't know if I really would have done it, considering it was Christmas and all that kind of stuff. I probably would have stayed away. But if we do get back up there, it could be interesting. Something that I will keep an eye on. But if we do continue to sell, I will, of course, be watching a retest potentially of this trend line coming down here. Depending on when we do that, I guess that's 467. That would be midway through the month, maybe 469, 470. That's in February. So let's see about just January. 468.73 would be the kind of the area in January. So either way, be watching this. Something like this, and then boink, something like that, right? So let's stay cognizant of these trends here. All right, let's move it along, and let's go into some other developments before we get into some internals, and then we'll get into some day trade stuff for SPY, although honestly I do not trade it too much anymore. All right, let's go into our TNX here, because we did have a pretty strong move here in the 10-year come in today. They were up, it was up about 2%, give or take. Let's throw onto the daily here. I did post this chart onto my Twitter feed if you guys are interested in taking a look at that. Getting a little more constructive here, closing over the daily finally here. A lot of overhead here, not only in moving averages, but still just structurally, really still overall a downtrend. But I think that this is starting to look a little bit better constructive wise as far as getting over that daily 9. But really for me, I mean, until we get back over the 200 here and the 20, I'd really want to see price, if, I don't really care what this does, but, we need to pay attention to this for that potential downside risk factor in equities. You can see here we are definitely in that overbought, that oversold area here on the daily on our Momo, and it's starting to perk up a little bit, right? We're seeing momentum shift in. We've seen a couple of false signals before where it started to look like it was getting stronger, but is this the time where finally we make a move back up to the zero line? Maybe. So we want to just pay attention to that, just to be keeping risk, of course, or potential macro downside risk at the forefront of our viewpoints here. But for me, again, unless we're really over 41, it doesn't really scare me too much. So we could still move up, but if it does, okay, we could have that potential headwinds a little bit more in the market. So let's see, right now it seems like it has a bit of a character shift here in the market, right? It got back over this 39 here. So as long as we hold over, and that's pretty much where the daily 9 is. So as long as that holds over here, now we could just come into a holding pattern, right, and do something like this. What that technically though would be maybe a bit of a bull flag consolidation here, especially if we don't break down under. If we break down under, okay, then we can start to look for a little bit more easing and more upside in the markets. But if we do hold that 439, excuse me, I'm still on SPY talk. If we still hold on to that 430, that 39, basically, then we could potentially see a move higher. We're really going to need, first step really is got to get over 39.80, basically 40, right? And then we would have to come up into that 41.80, excuse me, 40.80, and then 41. So that's going to be the main thing that we're going to have to see. Tomorrow I'll be watching. I don't think that this is going to continue tomorrow. Again, I probably would think it would go a little bit more sideways, and then potentially make the move back up over. But if we start to see candles, right, candle here, close, maybe we see one more like this, then we maybe see a move into here. Now as we come into here, this is where we could potentially just see a rejection back down to the 39.70 area, 75. Certainly could see a move from there back up higher, and then actually do touch that 41 zone. Could potentially reject there. I'm not sure. We will see. I don't know how strong that rejection would be. If you're bullish, you would want to see it all the way down here. But what may end up happening is just that we pull down just a little bit, like I did like this, and then we make another kind of little flag here, and then we see a move, something like that, right? Okay, and if this happens, we definitely would see probably a little bit more downside in the markets, but that's fine. The bulls can handle it. They are fat and happy and sassy from this Santa Claus rally, so they can handle a little pain. But this is of course just projection. We don't know what's going to happen, but we're just going to look at a couple of different pathways that could present themselves to us. And as I was saying, we want to be paying attention, of course, to these bigger macro, potential headwinds, just so we can check ourselves, right? Everyone's just so buy the dip, right? At some point, the market's going to shift a little bit, and they're going to, and then it's not going to be as easy, right? I hate to be a brand new trader and get in the market right in this last month, because you're like, oh my god, the market's so easy, right? You just have to buy calls on everything or go long and bada bing bada boom. If you've been in the last year, the market does not work like that. As we maintained a downtrend for a good 3 or 4 months, but we survived. So okay, let's now look at the dollar, right? And one more headwind we want to pay attention to. And what do we have here? Now the big thing on the dollar that I'm kind of watching, right, is this downtrend here, right? You can see the points of contact right here, boom, boom, right here, and now we're coming in right here to another potential area where we actually have recaptured, right, this trend line. Okay, so I've got no real reason to extend this, but I'm just gonna. So actually, let me come out here on the weekly. There we go. Okay, the weekly looks a little bit like it has not confirmed. And of course, it's only Tuesday, so we're going to have to see how this plays out. But from the daily perspective, the daily has recaptured, right? I think the weekly to me is going to be the telling thing. So take this with a grain of salt. We got 1 day close, barely. It was dollar was basically flat today, right? But we did technically close over this trend line, right? Recapturing this trend line can be interesting. But for me, overall, kind of same thing with TNX. I'm really not too concerned about any of this headwind. We start getting over 102.50. Okay, then we can start talking about some potential, issues with the dollar. But the same situation as I was saying with TNX, overbought here. Oversold, starting to see some momentum come back in. You see what happens last time we had a similar situation, a bit better, a little more like consistent than TNX was. But you can see here, boom, boom, and obviously dollar up, equities down, right? So let's see, do we get another push into the zero line? Yeah, maybe, right? And overall, though, that would be fine if we even also look just from this perspective. What do we have? Our October swing high here. And we got high here. They're about equal highs there, actually. Either way, if we came up to the zero, it would be another, basically a lower high, right? So even if price came up here, it would just be like that, and then you'd probably come back down like that. So, but we'll keep an eye. I'll be mostly watching to see if the dollar starts to get over this 102, because look at that's the low here from what is this? Basically Thanksgiving, the 28th of November, right? We start getting back over that, and that's like you can see here, tested this area. So if that structure changes and we start seeing candles up over that, well, that's a fat one. Then I'll get a little bit more concerned and think, not really concerned, so to speak, but a little bit more bullish on the dollar, and think that maybe we'd have a chance to come in and do something like this and just kind of come into that sloping 200 SMA, and then maybe from there, boink, comes down, and then we see equities rally again. So we will watch for that. All right, let's get into some of our internals now and take a look at those. Let's start off with the put to call ratio here and the VIX. Okay, volatility's just been getting crushed. We've been just hanging out here in this 12, 13, 12, high 12s, 13. We had a bit of a move today in the VIX, but pretty much still just very subdued VIX overall. And as long as we're in this area, there's really it's the same thing for VIX. All of this from the bigger picture perspective, any pop up here, a little downside, this gives us a little bit of downside in the market, but unless we're over 15, 75, 16 again, it's just a flash in the pants for me. So we could see this move, and we want to be aware of it. We did recapture 1270. We recaptured the daily 20 and the daily 9 EMA. So we'll be watching that. The Momo here kind of looks a bit coiled up, right? I mean, we don't, if this was like a pattern type of thing, it kind of looks like it's right. So could this be something that could be happening here, right? I don't know, maybe something to think about. But let's see. As long as VIX stays over that daily 9, I guess we have a chance maybe to. Did we hit 14? Yeah, we hit 14. Maybe we'll come up and tickle closer to 15 into the start of this month. We might sell to the end of January, rally a bit in February, and then we'll see what happens. But I have some thoughts of what might happen after that. But we'll get into that when the time comes. Nothing really here on the put call ratio. No real exaggeration to either side. Just sitting right there at our medium, basically our midline. So nothing there. All right, let's move it along. All right, something here that I think is a somewhat of a bullish. This is bullish, but I hate where we are on our SPX R50 and R200. Okay, and I'll explain what I mean by that. You saw the market, right? Is obviously kind of rolling over a little bit. Here's our SPX. Okay, here we go. We have our SPX coming down, but we have our SPX 50R. This is the amount of stocks in the market that are trading in the SPX that are trading over their 50-day moving average for new listeners. We have a divergence, bullish divergence. This is making a high, but this is making a low. You would think that this would be dropping and this would be dropping, but no. So I think that's a bullish indication overall for the market. Yay, bulls, right? Okay. But what I don't like is where we are. We're at 91% of solid stocks trading over their 50. Look what has happened in the market every time we've come up into these kind of more extreme readings, right? We have usually seen a little bit of downside, right? And you can see here we pulled back, right? I mean, this one was a little bit choppy. I don't think that's too good of a signal, but here it played out a little bit better. Here it played a little bit better on at 74%. That one was pretty much the best one. This one this one was interesting. This one diverged. We had a little bit of a pullback, but not too much overall. And actually, what I want to do, let me just see. Okay, here we go. Okay, I'm going to say that higher low technique. Yeah, you would want to see these in sync, and the fact that they aren't is interesting. So a lot more of the stocks are still pulling up overall in the market. So divergence there, good. I hate the placement, basically. All right, let's go into the 200 now. There it is. Okay, same song and dance here for the 200, right? This is the amount of stocks that are trading SPX and the SPX over their 200 period moving average. New high, low, right? So bullish divergence there, but same thing. I hate the placement, right? Getting into more of these extreme readings here on the 76 area. So this is a little bit more kind of, it's just the placement. I really would prefer this to be lower, to really kind of give more credence to the divergence. But it's there, so we want to just be aware of that. So I think those are two kind of cautiously still bullish internals that we would want to pay attention to. Okay, let's go into new highs versus new lows here. This one's a little bit more in sync, right, with what's going on in the market. Let's get back into this. This one's a little bit more in sync with our new highs versus new lows. This is rolling over here in our SPY, S&P, and we are rolling over a little bit in our new highs versus lows. So these ones are in sync, coming back into that zero line here. Let's see, where are we at? We're at 35, new highs versus new lows. See if we hit that zero. Maybe we just hit that zero, come down a little bit, and from there, that's where we get the move that pushes up higher. So I will watch that, how price starts to react in the market when we start to get into that zero line there. So paying attention to that. Okay, one of the let's look at our VIX internals here and our VIX futures here. Deep contango. Obviously, I thought I'd remove this. Deep contango still here on our VIX futures, but moving up ever so slightly, right? We want to have our 0 line, so this should be there. There we go. Until we get in backwardation, nothing really too much to be scared about here. But our 9-day versus monthly ticking up a little bit, still under 0, so nothing really to be too concerned of. VVIX up about 1.3% today. We're still hanging out in this holding pattern. Really, again, subdued volatility has been the name of the game. Nothing's really getting too interesting here. I think I would be paying a little bit more attention to this if we start getting over 93. Where are we at here? 88. We start getting over 90, 93. Start seeing candles breaking out of this range to the upside. Okay, then we can look at some potential more downside in the markets, but still under 0 in contango. So these good for bulls. Give me my check mark. Oh, that's not what I wanted. Check here. This one is a maybe. We'll do a little question mark there because it's just in this range. We'll know a little bit more information on VVIX once we start to break out, but I think this little range is worth paying attention to. If we do start to break over, then we can start over 93, and we can start to look into that, maybe that 100 level, right? If we're up in there, we probably would see this 9-day versus monthly over 0, and I wouldn't be surprised to see this up maybe into the negative 80s. I don't think we'll get up to negative 65, but it's possible. I don't think we'd get up there, but either way, I'll be watching this consolidation break for either way. Either we break out of it or we just come back down and trade back down into the 80s, or I shouldn't say trade, but we get readings back down into the 80s and 75 here, and that'll be good for bulls. But until then, we don't know here on VVIX. Okay, the main thing though, as far as a divergence that I am paying attention to, let's look at the Dow and the transports here. Dow, this has just been a super strong market, really. Dow has just been chugging along, beautiful trend really here. But what's happening in transports, right? According to Dow theory, we would not want to see a divergence. Here we're seeing the same kind of situation that we were seeing, but this time a bear in the SPX 50R. That was a bullish divergence, but here we've got a bearish divergence, right? Dow making a new high, transports making what seems to be an M pattern, right? We come up here, kind of breaking down, head and shoulders, M, whatever you want to call it. It seems to me that transports may come back down into that 15.534 area once again. So we would want to see the transports at least holding over that 15.900, we could call it 15.9896. I would want to see that holding these prior highs from August, the end of August, August 30th. So, and you can see here from back in February, you would want to see price holding over that. We did not see that. So, and we did break below that daily 9 as well. This is a bearish divergence here, so this is another thing we'll just put in our checkbook as possibly a warning sign. Again, and I'm not talking about a crash or anything like that, just weekly higher low, daily higher low to be put in, and then we can continue on our merry way to the upside, but we'll see. All right, I think that pretty much does it for our internals. Nothing really too much else I want to go over from that view, so let's go into some day trading levels for SPY and close it out. Again, thank you so much for joining me on these videos. Really appreciate you guys taking the time for supporting me and prepping every day with the market with me, and I hope you find these things helpful for you in 2024. Looking forward to I've been working on learning more about some editing software and getting some videos and really upping the production value. So I'm looking forward to that taking place in this first quarter. And I apologize for the audio. I do not have everything in my new workspace set up quite at the moment. but I will get that all worked out sooner than later. But for now, we're back on this audio. All right, let's keep it moving along here. Let's get into some day trade levels that we will be watching for tomorrow and into the rest of the week. I do not think I'm going to make another video because it is a short week, so this will probably be it for this week. We'll do something over the weekend. Hopefully. I do have some stuff going on, but we'll try to get something out over the weekend and see where we are from there. So we are make sure we are prepared for next week, our first full trading week of 2024. Okay, here we are. Okay. All right. Okay. Let's go into the hourly view. Why not? All right. So, what will we be watching? All right. So, we're going to really need to, basically, this 10 o'clock high, I want to see some 30-minute candle closes. Yes, we could make a case to try to trade maybe off of this 472.20 area. Yeah, I think we could make a case for that for a long trade. We are trading without a doubt in a downtrend here. We have our swing high, right? Let me get okay, swing high, okay, lower high, right, okay, made our lower low. So what could we potentially see? We're either going to see an equal high, right? If we were to take a trade off 472, if we're going to have 472 hold, what would we be thinking, or what would I be thinking at least? Potentially either a move to the equal high or only up to that 473.25 is one of the targets I was calling out today for SPY. Made a little bit higher than that on a long trade. I think I did get long on tech somewhere in this area here. I'm not exactly sure, but I did take advantage of this bounce here. That was pretty nice on futures. But I could make a case for either the equal high or another lower high to be put in here, the fourth one, right? Swing high to here, and then we make our move either back down to the equal lows. If tomorrow will be a chop day, let's see, SPY wasn't even down that much, only down 0.5%. QQQ took a little bit more of a beating. Overall, seems like that tech is kind of leading the charge as far as the the downside. Apple did get a downgrade from Barclays this morning, and really I think was down 8 points or something like that at one point today. Really got slammed. Microsoft wasn't doing too hot either, so we could see something like that, right? Come up equal high, or either we come to the equal high or a lower high here, back down to the equal lows here. If we break under that 472, I'll be a little bit more interested in the short trade, and we would then be looking for either we might come down here to this 471.30, 471. I'd give it about a 30-cent range, so 471.30, 471. We could come into there, and then from there we make a move. So I could do something. Let's look at something like this. We break under 472. We look for trades down into right here, and then from there possibly ponder along right back up here. But if we get back over, then I would expect to move back up like this. We could just get rejected, come down here, back down to the equal lows. Again, I'm wondering about a potential chop day because of the moves we saw in the market. Not so much again in SPY, but in tech. But let's watch out for this maybe 471.30 area. We could just trade in this like $2 range tomorrow, right? And just see something like this. Let me just put this back in here so we have it. Something like this. I don't know again how the price is going to go, but we could see something like that in a $2 range. So just be aware, especially because it's a short week as well. So yeah, that's what I got from these levels. I certainly would get a little bit more bullish. We start seeing 30-minute closes back over here, or especially over this little swing high here. But really, if we see like a 30-minute candle close or an hourly close over 473.25, I'll feel pretty good for a retest back into 474.25. We start getting over that. I'll probably be looking at this hourly POC. Nice, kind of lines up with our breakdown candle here, which I really like. I wouldn't be surprised if we do start to actually confirm over that 474.25, 474, reclaiming the hourly 200. I would be looking really 475, 475.25, maybe 475. 55 area. So this is kind of the zone I would be looking for price to come back into if we recapture right here. This is where we got to recapture. We recapture that up here to up here would be my targets for the longs if we recapture. Wow, that is an ugly drawing. So I could do something like this. You see price come back up, retest here, and something like that, right? And that would be if we had a candle close, something like that, right? I think that's a better illustration. So if we get that hourly close, 30-minute close, more time, obviously, the better confirmation. But if we see that close there, I'd probably be looking at 475 calls, maybe even just 474 to be safe, right? And looking for that move. That's only, what is that? About $1 and some change. So that's not horrible. But that is a kind of the most bullish scenario we could see. Even from there, though, we could just be rejected from that area. And before I pull up some balance zones, I did want to just throw on a different indicator here to show some of the sellers sitting, and just show still the hourly potential downtrend that we are trading in here. And you can see all these red here are sellers, right? And where the market could have some issues. So really, from this point of view, is going to be 474.70, right? That's going to have to break up, or we're going to have to see price get over that. And then from this point of view, on this indicator, we will have a new hourly uptrend. But until then, some areas where you could potentially look, and this is just based on the indicator, not based on any of these levels, but I'll call them out anywhere. First, there area where you could potentially, I mean, anywhere in this area could, be a short. But the first stop, this is the least strong, 473.82. Nice confluence here with our next level, right at that 474.70. So, or excuse me, 474.27. Another potential short zone right there, and then another potential short zone, 474.71. Right, 30 minutes not going to be quite as extreme. Pull it up here. That's going to give us a long signal if price starts to confirm over 473.85. So I just thought I would throw this out there. That even if we move up anywhere in this area, we still just have to have a little bit of caution, from this perspective. Let's take a look at the 4-hour. I think the 4-hour actually has gone bearish. No. Okay, so 4-hour is actually bullish, with longs being favorable into 471, basically. So basically today's low, as you can see, it broke it just barely. And look at that wick there. Holy moly. So, I'll look from the 3-hour perspective. Let's see here. We're still trading below the hole there. I wanted to see if this... Okay, I'm losing a little bit of trend strength here, but I do like how price is starting to get under the hole. I'd rather this not be orange. That means trend is getting a little bit weaker. But we are over it. Let's see if that ends up holding. 4-hour, whoops. 4 hours just not there yet. But starting to turn green. If we start to see this move under price, that'd be good. So let's watch from that 4-hour. I'll call out this level 473. We start seeing price hold over that 4, and that pretty much goes with what I was saying earlier. It's 473 to 473.24, right? See price start getting over this. Do a little drawing. Oh, that's not the one I wanted. Like that, right? Something like this. Okay, then I'm looking for this move to here, over here. I'm looking at the breakdown candle right here. This is where I pretty much, and that's pretty much that 475, 475.50. Of course, I'm going to look at that whole number, right? But this really would be the main target there. We start getting over that, that would be really nice, but for the bulls. But I don't know if that can happen. So there you go. I just kind of wanted to throw out this viewpoint as well, just as another little something to be aware of. I don't share these that much, but I want to throw it out there for y'all. Okay, let's go into some of the balance zones. I was really waiting to get more data to create these, because I need price action to do its thing for me to be able to create these. And I was finally got enough to really start to feel comfortable creating them. Oops. Let's move this up just a wee bit. There we go. Okay. There we go. Okay. Here we are. All right. So. What do we got? Okay. Still be watching again. That 10, what is this? 1030 low. So 471, 471.25. I'm going to be watching that. But as long as we stay below 472.75, 473.35, shorts can still work from this point of view. So if we come back up into this area, potential that we can see a short move. I have our half gap pretty much, 470.50 basically. I don't know if we'll get all the way down there. This balance zone is a bit wider of a range, 468 to, this is what, to 473.50. So this one is a bit wider. So I'm going to also wait to see. I might have to adjust these. I'm going to wait for a little bit more price action as well. So this could be adjusted, but I did want to, I still do like this kind of overall balance zone. It's a little big for me for kind of day trading points of view. But I still wanted to kind of throw this out there because they are still valid. But they could be potentially refined a little bit, and I think we'll get that obviously within the next few weeks, seeing where we trade. But as it stands, I still think that if we come up into this area, possible shorts can be favorable against this. We can see something like this, right? Price come up and then we come back down. Again, I don't know. This could be the area where we only make it down to. But if we start to break that area, right, that 1030 low, then I'll be looking for those equal lows back down to 470.50 more or less to here. And would I be interested in double bottom trade there? Yeah, probably. And we could look for a potential long to the upside for that, right? Below 470, below today Tuesday's lows, we'll be looking for trades 470. It's only 50 cents lower, but so we want to pay attention, of course, to that whole number, 470. Under that, 469, 468.50, we'll call it 45. Under that, 467.85, we'll call it, would be downside. If we do get into this area, I would be interested in longs down here, right? 468.50, 467.80, price comes into there. I would be potentially interested in a long back to 470. Probably would be the first target, 470, 470.50 here, that half gap, right? Okay, so that's all I've got for you. Again, thank you so much. Really appreciate all the support, and let's get this channel over 1,000 subscribers here. If you're liking the videos and find this information helpful, don't forget to smash that thumbs up. Let me know what you think we're going to get in January. Some consolidation, a little bit downside maybe. Would love to know what your predictions are for January. But of course, we let price action be our guide and try to keep any bias or thesis we may have just in the background, because if we have our thesis and price is not in sync with that, then obviously something is off, right? And price action is king. So let's have a great 2024. I wish nothing but the most success for you in your trading, and happiness in your life, your family's life, and all of that. So again, thank you so much. Let's have a great year together. Thank you so much for joining me, supporting me. Really appreciate it. Hope everybody had a great holiday as well. Let's kill it in 2024. And what do we always say? Remember, a prepared trader is a profitable trader. So let's plan our trades. Let's trade our plan, and let's kill it this year. All right, guys. I will see you on Twitter. Take care.